Welcome back to Understanding VC. I'm your host Rahul. Today, my guest is Vlad Tropko. Vlad is a partner at Digital Horizon, a venture capital fund focused on investing in early stage companies led by immigrant founders. Fund operates in London, Tel Aviv, and Dubai and specializes in supporting startups in fintech, martech, and e-commerce. With over 15 years of experience in venture capital and private equity, Vlad has successfully closed more than 30 deals throughout his career. Some notable deals includes Quantenna Communication, which was acquired by On Semiconductor, and Zipline International. Now let's talk. Hi Vlad, thank you so much for joining me today.
Hi, Raul. Pleasure to be here, and thank you for having me here.
So you were born in Siberia, right? How was that like?
It was almost 40 years ago. It's a snowy and cold place to live. So I remember the time when I moved to school when it was minus 40. Quite cold, but it gives me a lot of resilience and taught me to be very strong and passionate about the life.
Yeah. So I mean, what did you do when growing up?
So I was there until 8, so I was quite small and can't remember a lot of things from that times. Because at 8, I moved to Moscow to study there and start working. But from my what I remember, it was a really small city at the moment when I was born, and right now it's one of the largest cities in our country.
Okay. So what were your interests other than the studies? Did you have other interests like in hobbies?
So I'm a Liverpool fan, for example, and I'm watching the football a lot with the friends. So because I was studying when I was young a little bit in England, and several guys told me that I looks like Robbie Fowler, the
Nice. Yeah,
one
yeah,
of,
yeah.
one of the major
Strikers.
goal scorer strikers and goal scorers in Liverpool. From that time, so I think at that time I was 13 years old. From that time, I started supporting Liverpool and continue to do this. I love to travel and learn new things. It helps me a lot to see a bunch of angles in my work.
Yeah, you definitely do look like Robbie Fowler. And also, I'm a big Manchester United fan, by the way. Yeah,
Lucky use this year. So yeah,
yeah, yeah. And what do you think is the greatest risk that you've taken so far in your life?
I think I have a thank you for it's for a great question because I was thinking about it for a long time. So I have two stories about this. First is that when I was I think 23 or 24, I decided to receive my motorbike license, and when I moved to learn, my coach didn't know that I don't know how to drive a proper bike, just a proper bike. So and I was the first student in his life which don't know how to ride a bike even before sitting down the motorbike. But I survived, and luckily his motorbike at that moment was okay. So I fallen down by a bunch of the times, but continue my effort and then received my driving license for this. It's from one side. From the work perspective, I think the biggest risk which I took was my first angel ticket. I wasn't at that moment. I wasn't rich enough, but I was curious to try, and I'm thinking that it was the first ticket was my MBA in investments, in personal investments. So in the right now, when people who are thinking about angel investments, I definitely think that your first couple of tickets, it's your payment for education. So instead of paying 100 or 200 grand for your education, you can work and try out the angel investments instead of. And the amount of education which you will grab and skills which you'll find and learn would be enormous, and maybe even more than through the MBA.
May I ask, like, how so? Like, how can a 2-3 angel investment teach you more than an MBA does?
If you're properly working with the founders, you will see a lot of things about their psychology, how they are working together, how they are building the product from the scratch. So, for example, in my first angel ticket, 2 out of 3 founders moves away from the company within the first 2 years. And the third founder will become the only one, struggles a lot from the psychology perspective, from the product perspective, etc., etc. And luckily he survived and built a great team and great product, but still it took him a lot of time to go through this kind of process, and so it gives me a lot of flavor about some structures which I'm using right now when I'm investing in the startups. Like, for example, one of the key things when you're thinking about investing is that right now, quite majority of the startups have a reverse options. So for most people who haven't seen this, it means that if one of the founders will leave the company within the first 1 or 2 years, they will not receive a significant portion of their stake. Even they started as, I don't know, 50-50 co-founders or one third for each. But if they will leave within a year or two, they will have only one quarter or one third of their initial stake. And it helps the founders who will stay in the company to continue and give some additional equity to the new employees or new co-founders. So one of the examples which from the early days of my learnings.
Yeah. Yeah, I've heard you talk about how founding team psychology is responsible for 95% of the success of the startup, especially in the early stages. So, what do you think are, like, from a psychology perspective, some positive signs and also some negative signs, but of
So
a team?
basically, recently, one of the research from European VCs shows that more than 50% of particular decision is based on the management team. So the management team is a core for success in any startup. From the psychology perspective, it's we see we are looking on dynamic between the founders and on the skills which they have. Do they help each other? Do what if one of the founders is major one or not, etc., etc. Because it's like a proper marriage. Because every successful startup takes 10 to 15 years to grow to the really big company. So and if there is a lot of problems between the founders when they speak, when they pitch to VCs and to the possible customers, it can bring a lot of issues later on. So if we're looking on particular management teams, we're trying to find the passion and common passions. It's great if they have a common background because it means that they work together for a certain time. And by the way, it's quite similar to the VCs as well. So one of the key risks is that when you invest in a VC or in a startup is that founders will disagree on certain topics and move away from each other. So from other sides, are they introverts or extroverts? Are they first timers or serial entrepreneurs, etc., etc. So we're looking on each founder on each team as the organism, let's call it that way. So and we are like psychology doctors, and we are trying to assess each one, each team, can they survive through the ups and downs? Because all the startups, I mean, definitely each and every startup had a lot of struggles, and they will need psychology support and support in a bunch of other areas during their ups and downs. There is no silver bullet to build a unicorn or decacorn. You can see on the market that there are psychopaths who are raising billions of cash, and there are several guys who are just doing good things in proper way. From I like the idea which I heard recently that there are only two risks in a startup world. First is execution risk when you just build a proper business, and the second one is engineering risk when you're building a new business model, a new spaceship, or new, I don't know, organic food, whatever. So and while we're assessing particular company, we're trying to understand what key risks are in a particular product and a particular team.
Yeah. So, do you have like a process on assessing a team? For example, like a checklist or something like that, or it's just very intuitive?
It's quite intuitive, but definitely we're asking a lot of people and receiving third-party references about co-founders. So we're trying to, and basically we're also trying to have some sort of marriage after a couple of dates with the founders. So we're trying to have some proper time with the people, chatting with each other, chatting about the values. I'm also from time to time asking founders, is their partner happy or not? Because if we're coming back to the psychology, one of the key issues is that founders need to be focused on the business. That's why, for example, we love when the founders' partners are happy. And the founders could fully focus on the business. From other side, for example, we don't like to invest into founders who recently moved to a new country because on average it takes 2 to 3 years to settle up everything, either to put kids in the school, to find the proper house or flat, etc., and open a banking account. So but as I said in the beginning, the startup world is a networking game. So to build a proper network of people who will give you money or who will you hire, it take time. So you still need to build your relationships, your network within a new city or new region where you move to. If we're speaking about immigrants.
One quick comment before we move on. My wife tells me that, my priority should be to make her happy. Otherwise, she'll make sure that I'm unhappy. So I totally understand that. Yeah. Also, we didn't actually go through this. Yeah, how did you become a VC? And then, I understand that you guys exclusively invest in immigrants. Love to know your thought behind that.
So my story is the following. After the graduation, I moved into the investment banking. I became the research analyst in investment bank, focused on oil and gas. And after a couple of years, I thought that this profession is close to that, and I moved into the real investments. So I moved into the private equity world and family office world. And then at some moment, 2008, the crisis of 2008 arrived. And from that time, I started to invest into the VC. So when I jumped into the VC, growth VC venture fund, after several years, I built my network in a global network of VCs and founders in US, in Israel, and Europe. And I started investing my personal money into this world. So my first deal on personal basis was almost 10 years ago. But I think whole my VC background is 15 years. So around 5 years ago, I jumped as the first early stage VC partner to the Digital Horizon. So Digital Horizon we start with 25 million under management. Right now we have 300 million under management. The focus is on immigrant founders. And the reason of this is there are several reasons for this. First is that some of you may know that around 60 to 70% of NASDAQ was built by immigrants, first or second generation. And the reason of that is that immigrants already took a risk to move to another country. So they're risk takers from one side. From another side, from the cost perspective, most of them are still using a lot of capacities from their home countries. And if you're considering the US salaries or UK salaries, it's much cost efficient way to build a startup. So you just need less money to build a similar product in UK or US while you're outsourcing it to Eastern Europe, India, or Egypt. So that's probably the key. So our focus in Digital Horizon is in fintech and B2B software. We have two funds. One is on early stage, so late seed around A stage fund, and another fund is the growth stage VC. So we are providing some sort of to our investors access to multi-stage investment strategy.
Yeah. And also, may I ask, so at Series A, right, especially now, how should startup think about growth? Because in the last 10, 15 years, a lot of startup grew by just spending money. Not so it's like, you can really grow fast if you spend, if you're selling $1 for 85 cents, right? So that famous saying. A lot of companies did this over the last decade or so. What are your thoughts on what startups should be doing, especially from now on?
Sure. First of all, during my career, during the last 15 years, I was part of 3 or 4 crises like this. So before that, it was more like a vertical crisis, like clean tech boom and burst in 2012, 2014, etc., etc. So, but if we're speaking about the growth, first of all, we will see that the market will grow, but it will take time. So right now, you need to be resilient and focus on cost efficiency. So idea is if you can build a proper unit economics fast enough, it's much better. And I'm not speaking on A rounds to be profitable, but the investors will need to see profitability within a couple of years after the investment. It doesn't mean that after 2 years you need to be profitable, but you need to understand how you can do it properly to become profitable. From the idea of spending, I don't know, a lot of money into the marketing, etc., we luckily we didn't invest in any e-grocery stores, e-grocery startups or bike startups, which spend a lot of money. And the reason of that is because they're not capital efficient, and we see the capital efficiency as a core to our investments. Yeah, there is a lack of loyalty in those startups comparing to the fintech or B2B software, where you can see proper retention and proper relations with the customers for a long time. So, for example, there are a bunch of the infrastructure fintech companies who are still alive after 50 years, and a bunch of the banks are using them and don't think about changing them. So it doesn't mean that the new startup can arrive and take those customers, but still there is a huge opportunity to disrupt incumbents, and doing this without significant, selling for a free great product. For example, when we're asking people, do they have a pilots, we're always asking if they're paid or not. And if they're free, most of the customers will don't care. They will use it a couple of times and then forget. But if a particular founder can sell it for money, it's one of the signals for us that first he or she can sell, and think properly about the business. Because some people thinking that the startup is not a business, but in the end, it is a business, and it's hard business. And you need to set up it properly. We clearly understand the operations would be not on A rounds, for example. It would be very early from the operations perspective. So you will not write all the playbooks for your growth, but later on you need to build the processes, et cetera, to build a proper business in the next 3 to 4 years after our investments on the A round.
Yeah. So, can you name a specific infrastructure in fintech, that you think there's an opportunity to build right now?
So what we're seeing right now is that there is a huge demand from wealth management on a new infrastructure place. Because the wealth is changing the place, I would say. So because of the aging population, more and more people with millions need an access to the proper infrastructure. And historically, wealth management infrastructure is, I think, 40 to 50 years old in most of the multifamily offices or applications. And we see that the wealth management is one of the core infrastructure which need to be disrupted in the following years. We see several startups in this space, and we believe that there is going to be much more. The issue which they have is that it's a lack of trust. And even when you look on companies like Revolut, historically, when they were starting, nobody having there more than a couple of hundreds in the bank account. Right now, there is some trust, and the average deposits are but the money which you have on your Revolut bank account is much higher comparing to what they're building at the beginning. It's from one side. So another infrastructure which we believe that will grow in the future in the next decade would be CFO tools and treasury management tools. So SVB crisis shows that a lot of founders have just one account, and because it's quite intensive for early stage startup to have two accounts and manage them properly, we will see much more startups in this space which will help to manage your cash, your forex exchange rates, et cetera, to help founders and small, medium, and even enterprises to assist in their daily activity.
Yeah. So going back to wealth management, this is so true. So even in my case, in my Revolut account, I keep less amount. It's my, daily expense account, and I don't trust it to use it as my main account. So this is then not a tech problem, is it? Is more to it, right, than just building better infrastructure.
If we're speaking about the fintech in general, it's a lot of things is about the trust. So, and for example, in Revolut case, when or if they will receive a banking license in UK, it would be much more trust in their business. So comparing to Monzo or Starlink, for example, who has this banking account. And in a similar way, it's if I'm speaking about the wealth management applications, You could most of wealth person will not give money to the startup which just appear. That's the biggest issue because you just don't have enough trust to give to manage I don't know 1 million or a couple of or even couple of hundreds thousands to the people which you would just pop up. That's why we're seeing an enormous amount of startups which are not managing the money, but give you some sort of overview over your assets. And later on, while you will build the trust between you and the startup, they will ask you to grab some of your money under their management.
Yeah. Okay. Also, going back to, you mentioned that you'd like to invest in capital efficient businesses, right? So I see this similar argument from a number of VCs, and it makes total sense. But these services need to exist, right? Because, I mean, we've all gotten used to Uber and all these delivery services, plus the bike sharing and stuff. So then there is some sort of value creation that's happening. It's just that nobody has figured out a way to make this profitable business, and also maybe build a moat around it.
It's so I think even in the e-grocery space, there are a couple of companies who are profitable after a couple of years. There are a bunch of the hurdles to be profitable in this business, like a cost of labor. That's why, for example, Eastern Europeans are much more profitable comparing to U.S. or Eastern or Western European startups. Like, for example, in Eastern Europe, there is the Getir from Turkey. So I'm not sure about if the Getir is profitable or not, but I'm sure that their core Turkey business is profitable. So from the VC perspective, we're focused on the size of the market, and if the market is too small and too tiny, it wouldn't be interesting for us because we could not have a large outcome from the particular startup from one side. From another side, in this particular area, I mean, in e-grocery space, the key was to grab a maximum amount of market share. So, and the hope was that if you have enough of brand awareness and market share, you can build more loyal customer base. That was the initial idea if we're speaking about e-grocery, for example. But if we're speaking about the enterprise software, it's a much slower process. I mean, the sales cycle in enterprise software on average is between 12 to 18 months. In the PLG like startups, it's much faster, so 2 to 6 months. And PLG startups are more looks like right now like B2C startups in some way, and that's why we are looking on some metrics. If we consider PLG startup, we are looking on them like proper B2C startups with all the kind of conversion rates. Is it possible to make those companies profitable? Yes. Do we asking for a profitability on round A? No. And we see that it's still a lot of marketing hacks to be considered to grab enough audience and customers to grow and be a really big company.
Yeah. And how do you think VCs can overcome their own prejudices and make better investment decisions over time?
It's a great question. Nobody knows this particular area because what we're seeing right now is that for example, in Europe, a lot of geographically focused funds are focused on particular country, and the reason of that is a cultural. So I'm researching a lot of things about the cultural difference and how to forget about it. But still, most of the VCs are focused, for example, on warm introductions. And again, it's the reason of this is because you receive a signal from whom you receive a deal, and from one side, and from another side, it builds you some sort of trust. So we see an enormous number of initiatives to help to the female founders, for example. We as the Digital Horizon in totally invest, I think share of female founders in our portfolio is around 17%. So it's 6 or 7 times more than on average in UK. And we love immigrants because the significant number of immigrants doesn't have enough network to, and again, trust to fundraise from local VCs. It's hard question to crack because bias is all around us. It could be about gender, race, etc. But we are trying to, while we are reviewing particular startup, a particular team, we're trying to avoid it as we can.
And you're trying to avoid this because you think that would generate better returns?
Yep. It's from one side, it's our angle. So that whole our team are immigrants. So the team of Digital Horizon consists of people from Israel, South Africa, India, etc. And we believe that we can understand better the immigrants and help them to settle, to build their network.
Yeah. Yeah. So speaking of prejudices, a lot of people who work in VC, uh, mostly from finance background. So what do you think would be your advice to somebody who does not have a finance background and also not a successful founder yet to break into VC, especially if you're something like if you're doing something like me, running a podcast?
So there are a bunch of the ways how you can break in the VC world. You as a person can join the scale up startup, which is growing, I don't know, from 100 to 200 people to several thousand. And it will be a great signal for VC to hire you because you know how to build a scale up and they are looking for people who has the skills and experience. We also see that the people who has a proper community can have good access to the founders. So, for example, in your case, the podcast, and you have an access to the VCs and to the founders as well. So you can start investing your personal money on a personal basis and then build the syndicates like a lot of people are doing. Right now, the cost of the syndicate is quite low, so you can find the proper startup and leverage your audience to invest together with you. And while you will invest, you will show to VCs that you know what to look on in the startups and in your process and mind thinking about the particular vertical startup or idea. So it definitely will help you to build your track record, and then maybe instead of joining the VC, you can build your own VC fund in or join the some of the partners of who you interviewed could propose you to join them.
Yeah, and I've heard from many other people that investors will back you, and I mean LPs will back you if you have a track record, and also if they like you. What is that like?
It's again. I think I said it too much time during this podcast, but it's everything about the trust. So people love to invest into the. Again, it's some sort of bias, but you could not avoid it. So people love to invest into the similar personnel as themselves, maybe younger, maybe older, etc. So definitely you should find several common points, common interests, for example, with the particular investors, and this will help you to basically sell yourself to investor. And by the way, we as a VC, we believe that we are some sort of marketplace. We are selling sell our minds to our LPs and investors to the fund, and sell our skills and our minds to the founders as well. Because founders can also choose between, if they're great founders, they can choose between several VCs. So,
Yeah.
and we need to sell ourselves to those people.
Yeah, one last thing. What is super old in VC that you think won't change for a long period of time, and also what is new in VC that you think will remain in the future?
I think VC still is a networking game. So it means that I mean, on early stage, definitely it's everything is about the people. So and about the relations between people. So I saw several times when the VC is back, several serial entrepreneurs several times, and even previous startup will fail. But if VCs believes in particular person, and they will back them in a one on or several startups and startup efforts. So I think the relationships, trust, and the way of building the and fundraising the startups will stay the same. From other side, we see the growing number of tools which assist to VCs. It helps you to source deals, to consider them, and to look on the metrics, etc. And those tools will help to make the proper decision, maybe without biases from one side, and from other side to make a faster decision and more reliable decision. Let's call that.
Yeah, this was great, Vlad. Thank you so much for taking the time to do this.
Thank you, Raul. Thank you very much for your time. It was a pleasure to be here.